Here are 3 reasons why to subscribe to Fridge Financials on YouTube. Number 1, it is free, which is the best price that you can pay for this kind of content. 2, I am completely transparent with all of my investments. And number 3, I have a variety of educational videos every single week. Now let's get on with the video. What is up, YouTube, and welcome back to another Fridge Financials video. In today's video, we are summarizing some recent trades in their ticker trading challenge. If you're excited for today's video, make sure you smash the thumbs up button, subscribe to the channel if you've not already done so, and turn on the bell notifications for all future uploads. Your support has been absolutely fantastic along the way. We are over 60 subscribers. We are more than halfway to my goal of 100 by June, so I'm looking forward to hopefully smashing that goal. And if you're watching this video right now and you're not subscribed, and you don't want to, please let me know down in the comment section. Maybe it's the content I cover, maybe it's my annoying voice. I have no clue, to be honest. But any feedback you have down below, make sure to leave it there. Again, because if you're not subscribed and you're watching this, just let me know what you want to see. I'd be more than happy to produce any kind of content you're looking for that's finance related. So please let me know your feedback down below, as always. But without further ado, we're going to get right into this video. And we have quite a few trades open on the ticker trading challenge. If you're new to this mini series, because I don't really update it frequently week to week because my trades are longer time periods. Again, we started with $5,400 in cash essentially in this portfolio here, and I've been tracking it on a spreadsheet, which I'll show you a little bit later on. And my goal is to beat the historical 10% return of the S&P 500. So my goal by the end of the year is to make basically $540, or a little bit more than that would be the dream, obviously, as well, because more money is always better. So we're kind of documenting the trades. We're covering what I'm doing. You get to see all the trades I'm doing on the right hand side there and see the insights of what I'm doing here. Thankfully, YouTube won't flag me like TikTok for scamming, because this is my portfolio and this is what my hard-earned money has been like over the years. Without further ado, so we did in fact open up, this is a little while ago, we opened up a Sirius XM $4 put, cash secured put option here. Again, if you're not familiar with what a cash secured put is literally what it sounds like. It's cash secured, and a put is, again, talking about the stock price going down. So what this does essentially is that you are selling this option to a buyer, and you are in hopes that Sirius XM won't go below $4 by the expiration date. So my attempt at this trade here is that by July 19th, as long as Sirius XM is not below $4, I will collect a $56 premium on this. And again, $56 out of a $400 collateral, you're looking at a little over like 12%, give or take, I believe, on that trade, which is an absolutely, just that one trade in itself beats the historical average. So you can't argue that kind of result there. Again, this one has till July 19th. I'm really trying to take advantage of stocks making corrections and everything else as time goes on. As you can see, Sirius XM has taken an absolute beating so far, being down 25.5%. So my hope is that it's going to find a bottom relatively soon, start to reverse a little bit back up to the upside a little bit. As long as the bottom is $4 or a little bit above that, then I'm going to secure my premium and call it a day and move on with that one. Worst case scenario, I get forced to buy 100 shares of Sirius XM at $4 each, but they pay a dividend, so I'll be able to collect a little bit of a payment on top of that as well to reduce my average buy-in for Sirius XM. Now, my second trade, XPeng, is still here. Now, I've rolled this position over, I believe, twice now, if I'm not mistaken. At least once. I know I've rolled it over at least once. I think it maybe even be twice at this point. But a little bit of a recovery over the last couple weeks, which has been great. As you can take a look here at some of the trending, it was down at almost $8, and then it's kind of rallied up since, back up to close to 10, which is great. My strike price for this trade is at $10 here, so I have $1,000 essentially in premium, or $1,000 in collateral currently put into this trade here. And even though it says that my credit's $212 essentially, I had to close the position earlier, so my return is going to be a lot less than that. But we'll take a look at those numbers a little bit later on. I'm still holding XPeng. This one goes till June 21st. Again, hoping that we have about 3 months for expiration to have a little bit of a rebound and recovery, so XPeng's back over $10. Then we're cool and we're chilling and we're loving it and everything else. Penn Entertainment still killing me slowly but surely. But hopefully we get a little bit of a recovery. I know they're starting to announce ESPN bets. I think like one of those sports betting apps is that Penn Entertainment works with. But again, that one has had a little bit of a roller coaster. Thankfully, it looks like Penn has found a little bit of a bottom at about that $17 mark, which is kind of great at least. So, hopefully get a little bit of a rebound and recovery, because they have been absolutely slaughtered since that earnings report, which was a huge miss on that one there. So those are the 3 trades of individual stocks. I have 2 more trades here, which are spreads, which is on 2 major indices of the market here. The first one is QQQ. Now, this is a very specific put credit spread with these strikes here and here. I feel like I know why the strike price is like this, but I'm blanking right now. So if you're watching this video, you know why the strike price is so specific, please let me know down in the comment section below. But essentially what I have done is I have opened up essentially 10 contracts at $9 each, so $90 in premium total, to hopefully have QQQ expiring in May 17th at $440. I know this seems like it's a long way away because right now it's at $434, but again, this move right here, this 1% move, was a $5 move all on its own. So if I was able to get like a 1.5% move, then that contract is going to be starting to be looking great for us as a result. Again, I'm giving it about 2 months of expiration here, so hopefully we get a little bit of a rebound, some more good news in the markets. We're in a good market right now. Maybe it's kind of sold off a little bit in the last couple of days, as you can see. It was really high up here at about 444 and March 13th, and it really sold off towards the bottom there. So I kind of was like, you know what, this might be a little bit of a, taking profits before the next run up possibly. So I did go in with QQQ. That one was on Thursday at the market close, and then I opened up 2 more put credit spreads on the other major indice of SPY, which is the S&P 500, and that one is 2 contracts. As you can see right here, 2 contracts, $41 each, so it's $82 in premium total, and that's for SPY to close above $511, and that one is to expire in about a month and a half. Now, again, before you say, oh my God, like that's not a lot of time, again, even a 0.7 move was $3. So this was already basically in the money this morning. This is already doing great. A little bit of some sell-off pressure happening, looks like, because we had some more inflation data coming in, and it's kind of looking like inflation is staying around for a little bit longer here. So maybe the markets are taking some profits. I'm hoping it's only temporary for that once that order comes in to the profits for me at some point. Again, I have multiple contracts for that one, so I can take profits if I need to. If I need to trim profits, I'll trim profits, or trim losses in that case, because it could go both ways, of course. But so those essentially are the trades that we're looking at for the ticker trading challenge. Now, the spreadsheet over here, as you can see, these are all my active trades. In the blue are the ones that are active, so XPeng, Penn, SiriusXM, Invesco, QQQ, and SPY. I did have a 4 contract S&P 500 put credit spread. That one, just because I don't know if I even covered it in a previous video by any chance, or maybe just covered it on, I don't know if I covered it even on Instagram by any chance. Let me take a look. Let me show you what I got here. So let's take a look here. So in the history books, we are looking at, that's me investing right here. So I opened up a put credit spread for 4 contracts for $136 in premium, and then just 1 week later, I secured $16 by buying it back. Now, before you say fridge, that's not even close to the $136 that you wanted in premium. Yeah, but I secured 4% in a week. 4% in a week is almost half of the historical average in a whole year for the S&P 500. So I'm okay with that. I'll take that 4%. I know if I can do these small wins, I can really start to build my portfolio up a little bit more and be able to hit that, profit-taking strategy, and hopefully be able to outperform the S&P 500. So as you can see, we have these 5 blue trades are open right now. Again, I start with $5,400. These are obviously active, so I haven't finalized the premiums yet because they're still active, of course. But right now I have $4,121 of the $5,400 in circulation of my trades right now as we speak. Right now, we're looking at about almost a 7% return if these trades all expire with what I'm looking for them to do. And obviously, after taxes, is about 5.39% because you got to factor in taxes at the end of the year. And S&P is at about almost 8%, so I'm not too far behind right now. And to be honest, when you look at this, say, well, Fridge, you should just be investing in the S&P 500. Yeah, that's true, but for the first full year so far of me documenting my trades, looking at my trades, and the fact that I haven't blown the account already is great. Only time will tell how the run at the end of the year goes, but the fact that I haven't blown off $5,000 already, I'm being careful. I'm taking a little bit of caution for my trades. I'm learning as I go. That really helps me out. Obviously, this Boeing trade really like makes me sad because it would have expired perfectly fine. I'd be up another $200, but you know, you learn from your trade mistakes and everything else. So that's kind of essentially where we're at right now. So thank you so much for watching. Again, hopefully you enjoyed this content here. Again, if you made this far in the video and you are not subscribed, please let me know what kind of content you'd like to see down below in the comment section. Thank you guys so much. As always, I hope you guys are continuing to make money in the market, and I will see you guys in the next video.